So I thought I saw an opportunity that was going to make my 5,000 go to 10,000. And boom, it went south in the final seconds.
Hi everyone, welcome to another episode of the BezoSmart Podcast series. I'm your host, Ashley Bruanyante, and the BezoSmart series is your pod all about financial literacy. We're all about growth and building our wealth. I want to say that we're so proud of you for making the step today to listen and improve your finances, okay? Go you. Alright, so on today's episode, we're going to talk about business and investments. Our guest speaker is Dr. Kofi Nyarko-Pong. I'm going to tell you a little bit about our speaker, okay? Dr. Kofi Nyarko-Pong is a medical doctor by profession and a marketing entrepreneur and business builder by design. Kofi also holds a Ghana Securities Industry Certificate from the Ghana Stock Exchange as an Authorized Dealing Officer. Dr. Nyarko-Pong has varied interests from his love of music to photography to traveling around the world and experiencing different cultures. He is also a blockchain and cryptocurrency fanatic, not to forget his love for money. Thank you, Doctor. Welcome to the show.
Thank you very much, Ashley.
Yes, just so all of you know, please, this is my boss sitting right here. He's my chairman. Yes, so he has come to put me on, and when he puts me on, it's over for you all because
Game over, huh?
Game over.
I see.
Yes, Doctor, how are you doing today?
I'm good. How about you? You okay?
I'm good too.
Nice.
Yeah, and your bar, you spoke about how you love traveling and all of that.
Yes.
What has been like your fave experience out there?
I don't know. I think I liked Monaco and I liked Singapore.
Oh, what about those two places?
Because everybody around you is wealthy.
Oh.
I love money, so yeah. You literally
smell. Oh,
smell
you
money.
smell. But it's like wealthy people smell different. Yeah, like they have this different vibe. I can smell that coming here.
Right.
So, guys, please.
Yep.
Awesome.
I like those two places.
Awesome. I asked you earlier about what you do for a living, and you spoke about digital asset trading and network marketing.
Right.
Yeah, so I want to just talk about that for a bit and what you do. So with digital asset trading, I know regular assets, like physical assets, like houses and other things we have over there.
Right.
But what are these digital assets in particular?
So, hello to all the viewers and all the listeners and wherever they find themselves. Anyway, so basically, like you said, assets are like a resource that you own. And from that resource, you can use it to generate value, meet debt obligations and stuff like that. Okay. So when it comes to...
Before you continue, can you please talk louder?
I should speak out.
Yes.
Okay, cool. So when it comes to digital assets, okay, basically, these are assets, okay, that are coming in the form of, that are coming digitally, okay. So they come with the right for you to use that data, okay. So they come either in cryptographic form or embedded in a digital way. So, an example is, maybe copyrighted material, maybe selling artwork electronically. There's so many digital assets that can give you value, okay, that are not the physical ones we know, that are not like the real estate, that are not physical or tangible goods, but then these are embedded electronically or signed cryptographically. So that is where we call them, that's why we call them digital assets, okay. So the term has now been used mainly for cryptocurrencies and things that have to do with the blockchain, okay, blockchain-based assets, okay, even though, like I said, copyright materials, images, and stuff like that can be held electronically are all digital assets. But then, by and large, because of the growth of cryptocurrency and other tokens like that, the term has now been mostly used for cryptos and stuff like that. So, digital assets are very popular now, obviously, for the gains that people stand to gain when they engage in that, as well as the losses. Let's not forget about that. And then because people can actually make a living out of it just by trading.
Yeah. Okay, so I've heard like two things. I've heard cryptocurrency and I've heard digital tokens as well. I saw something about it. I saw that in relation to digital assets, we have ICOs, that's initial coin offering, and in the normal asset category, be it I think stocks, we have IPOs. So I guess when the company gets to a certain point, like a certain valuation, they go public and they allow us to be able to buy shares, so we can make profits annually or whatever the agreement is. So also, I noticed that with the IPO, it is when the company has gone to a particular stage that they go public. But with the ICO, it's a crowdfunding method. So I want to get the distinction.
You want to get a distinction? Okay. So basically, cryptos are now going through a phase of regulation. I'm sure I'll touch on it later, but they are now going through a phase of regulation. Unlike the IPOs, the initial public offerings, where companies, have to put out a prospectus and say, look, we have grown to this level. We want funds. We want the public to come and buy funds directly from us, at the initial offer. So that's how come the word IPO comes from. So basically, with ICOs, a company just puts out a website, because remember, these are digital assets. Everything is electronic. So a company just puts out a website and says, this is our project. We are trying to make gaming efficient and bypass many servers. We are trying to make it decentralized. Then I'm just giving an example. And then you say, okay, you are buying into the idea. And they say they need $10 million to do this. So when it comes to ICOs, because you're not usually going to see the company directly, you have to find a way of giving your money to the company. And that is where you use cryptocurrencies such as Bitcoin, Ethereum, or USDT to exchange for the tokens. These tokens represent what in an IPO would be shares for you. So when they give you the tokens in return for your Bitcoin, your dollar value for the Bitcoin or Ethereum or whatever money you paid, digital currency you pay to them, they give you the tokens. Now the idea is that as the company grows, as the company is valued higher, of course, because you put in your money hoping that it will be valued higher. The idea is that over time, these tokens, let's say you got them at 1 cent, you are hoping that to move to 2 cents or move to 10 cents and move to 3 cents once they become publicly traded. Another distinguishing feature is that IPOs will be traded on stock markets, stock exchanges like we know, traditional ones. But then with digital assets, they'll be traded on blockchains, and they'll be traded on crypto exchanges. So an example is Binance, an example is KuCoin, all these big exchanges. So these are centralized exchanges. They are also decentralized exchanges as well, but basically they are traded on these crypto exchanges. Then you can melt them back to the dollar form for your money as they appreciate. But then with the IPOs, of course, as they are listed on the stock exchange, yes, you go through the regular process and then make up your money.
All right. That's good. What is the difference between digital asset trading and trading on the stock market?
So basically, one is easier than the other. That's the simplest way I can put
Which
it.
One? Stock market?
No, stock market is a
more
little
difficult.
more. Let me explain the difficulty. So difficult in the sense that you have to be an authorized dealing officer. Before you are even given access to the platform to trade on the Ghana Stock Exchange. Let's use a Ghana Stock Exchange. So for you and regular folks out there, you have to go through a broker who will set up a CSD account. And then from that you go through them and say, look, I want to buy MTN shares. I want to buy Coca-Cola, whatever. And then they will act as the intermediary for you. Then you can trade, buy or sell, whatever from them. But with ICOs, and this is where the game changer is, because we think this it makes it like all inclusive. Your grandma at home can sit down with a computer or her phone and decide that I want to invest in this ICO, because I've heard about this company, they are doing great, let's take a random example, say Polkadot, and then Polkadot wants to do something crazy, so you like the idea, all you have to do is give them the digital coins in exchange for their tokens. Maybe Bitcoin in exchange for their tokens. Now, once they are listed and they are traded publicly, you can register on these exchanges. Nobody comes to ask you for your qualifications, whether you went to high school, you just have to be 18 and then go through KYC, which is know your customer. And then once they verify that you're a true human being, you're not a fraud or a ghost, you have access to the platform. And then from that platform, you can say, I now have access to my tokens. I want to buy and sell them as often as you wish. The simple rule is You buy low, you sell
You sell
high.
high. I always
Simple
hear this.
rule, but
Buy low, sell
it's,
high.
it's not as simple as it sounds,
As it sounds.
right? Yeah.
So I
So
guess
yes, basically that is the main feature. You can easily register on any crypto exchange. Okay,
Exchange, that's
Binance. I
available.
can take you through the process in a simple 5 minutes. You have a Binance exchange. You do your KYC, send them your passport details, everything. Now you can trade the coins and then have access to them, as opposed to going through an intermediary with normal,
like a broker.
right, with normal.
So I guess with this one, you just need to do your research, and then you are.
Yes, it helps. It helps if you have a mentor, as in life.
Okay.
Everything. Okay, it helps, because if you don't know what you're doing, chances are that you're going to
Yes.
waste your time. And yeah, but it helps
Yeah.
if you have a mentor, and mentor will take you through, make the steps shorter and profitable for you. So yeah,
Okay.
that is it.
Great. Now I hear most people who trade on the digital market, they're always talking about these terms, and I'm always wondering, okay, so what is this thing to? Right. So I just want you to talk about the terms I'm going to mention and what they mean
Okay.
when you are now getting into the markets and all of that.
right.
So trading pairs, for
Okay.
example.
So currencies are like, or when you're trading assets on stock markets or crypto exchanges, okay, it's like a boxing game. Okay, so what do I say? It's actually versus Kofi. Okay, so if let me use traditional forex, okay, foreign exchange markets, okay, the Ghana cedi and the United States dollar, okay. Today I hear it's even 6.1 something. It's getting scary. Okay, so it means that for a round of boxing where you have $1, okay, you need 6 cedis to get that $1. Okay, maybe a week ago you would have needed 5 cedis, 90 pesos or something, but now it's 6. So what is happening? The dollar is beating up the CD. Okay, so the same thing in exchanges. Okay, they are grouped in pairs. Okay, so trading pairs, let's say you have Bitcoin, okay, versus the United States dollar. Today, just before I came online, the Bitcoin was trading at $47,000. Okay, so that means that for every one Bitcoin you want to own, okay, electronically, cryptographically, you need $47,000. Okay, so people who own it will obviously pay for it to appreciate. So if it goes to 60,000, okay, at its all-time high, Bitcoin was trading at 64,000. So at 64,000, you need that much to get a single Bitcoin. Okay, so the pairs are any two of the tokens which are matched, where you can buy and sell or exchange them. All right, cool. So it's the same thing happening in forex market. The same thing happens in the digital market. So let's say you have Ethereum, you want Bitcoin instead. So you go to the Ethereum Bitcoin pair. Okay, they usually come abbreviated in 3. So Ethereum is abbreviated ETH, for instance. Bitcoin is BTC. So you go to the pair, the exchange, you see ETH, BTC pair. Then that's where you want to buy one or the other. And stuff like that. So those they usually move in pairs, because you want to see the value of one in relation to the other. Right.
I got that.
Right.
Stop loss.
Okay. So stop losses, let's say you're trading on a currency, an exchange. Okay. Now, you're not always going to be on your phone 24/7 and looking at the price and say, okay, I bought Bitcoin for 46,000.
I thought those are food traders, so that's what they do. Computer, looking at the charts.
Yeah, but it's stressful. Okay, if you want to do that, it's stressful. So there are ways you can reduce your BP level, your stress level, if you engage in stuff like stop loss. So basically, you tell the exchange, okay, you give them an order that, all right, I bought Bitcoin for 47,000 this morning. But look, me, based on my appetite for risk and my money, if Bitcoin falls to 40,000, get me out. Okay, so you set a price. It's a price at which you decide, you tell the exchange to either buy or sell your currency for you. Okay, so usually it will be to sell your currency, because you are trying to stop a loss. Okay, that's where the name comes from. So let's say you buy another asset. Let me use another asset called BNB, for instance. Today's trading around $400. So you decide that, look, okay, long term you hope it appreciates, but for whatever reason, BNB, okay, Binance's coin is going to 300. So you say, no, I won't take anything lower than 300. So it immediately gets 300. Get me out of the trade. So it's a pre-instruction to the exchange to either buy or sell, or in this case usually to sell a token to stop further losses.
Okay.
You're in trouble.
You don't want trouble.
Yeah, you don't want to wake up. Good. So immediately you might not be behind. Something happens at night, Asia time, and the price hits it. Automatically, it triggers your stop loss, and then the asset is exchanged. So you say, okay, he gave us $47,000. It's now $40,000. Okay, you've lost a little, so it's fine.
It's fine.
Yeah, right.
Makes sense. How about market price and last price?
Okay, so market price is like basically the price a currency or an asset is trading for. Okay, so let's say right now, like I said, Bitcoin is going for 7,000. Okay, it moves by the second. So let's say another minute is 48,000. That's the market price. Okay, another minute is 48,500. Okay, so within the day there are intraday movements. Okay, of different market prices, but the last price at which you see it. Okay, let's say it went to 48,000, went to 49,000, it's back to 47,000, it comes up to 48,000. The last price goes through. Yeah, so that is that.
That is that. And the I think limited standing order.
Okay, so a limit order. Okay, without going there, several types of, but let me explain it in a short in a nutshell. So limit orders are also instructions that you give to the broker that you want to buy or sell at a particular price or better. The key word here is or better. Okay, so let me give you an example. Let's say you don't want to be monitoring the prices of Bitcoin right now. Let's say it's for 7,000, but you're not sure is it going to go up or down. But you say, okay, if I see it going to 50,000, maybe I'm confident it's going to keep rising. So instead of always going to check whether it's gotten to 50,000 or something, I say, okay, I'm going to set a limit buy. Okay, so there's limit sell and there's limit buy. Okay, so this time with the example I just used, I'm going to set a limit buy. In the event Bitcoin gets to 50,000, broker, you have my money locked. Put me in the trade and get me Bitcoin. Okay, so it doesn't execute the trade instantly. Okay, this is in contrast to what we call market orders. Okay, so limit orders are the opposite of market orders. Whatever price is selling at now, you go for it. Okay, but then you say, okay, no, if it gets higher or better, okay, put me in the trade, that kind of thing. Okay, the reverse holds. Okay, so let's say you want to monitor something or you think it's falling, you want a better price because you think it might reverse. Okay, so let me wait, let it fall a while, but I don't want to enter now. Okay, so let's say Bitcoin is at 47,000, but you feel like it will go to 45,000. You don't want to keep monitoring. So you say you set a limit, but at that 45, okay, and say, look, if it gets that lower or better, execute my trade for me. Okay, so it can go both ways. Either you want to. It's the same way if you are already in a trade, you can also use limit orders. Okay, to say that, okay, I'm already holding Bitcoin at 47,000 today. In the event it reaches 64,000, which is the all-time high. Yeah, I've had enough. Because I don't know what happened, whether I will keep going from there. I've had enough, just get me out. You can set a limit order to get you out like that. Okay, so that would be an example of taking profits. Okay. Yeah. So that's how it works.
Okay. To sum up, digital asset trading. How many years have you been in the market?
So I've been in the market maybe 5 years or more. Okay. Yes. Yeah. I'm not sure I'm counting well, but yeah. Let's just assume 5 years. Yes.
What?
So it's usually people come in and the trick is that they think, oh, it's quick money, so it's easy.
Oh, right.
Okay, but it's far from easy. As with everything in life, if you want to, mastery comes with experience and practice and patience. Sometimes people come to me and then they're like, what do you want to? Even though I tell them, okay, you know what? Let me get you. I analyze you based on your risk level, based on your money, based on what you want, what you use the money for, and how much. And I say, okay, you buy this coin, okay, and then in 2 weeks the money is going down, and then they are mad, and you're like, okay, enough, I'm getting out. Okay, only for it to happen in 3 months that they would have doubled their money. And this is a real life story, I'm telling you. They would have doubled their money. So the person then comes back to me and is mad, and I'm like, you lack patience. Okay, so because nobody knows what will happen. So as with everything, it pays to learn what you're doing. Okay, knowledge is key, and then you need to have patience, and then the experience will bring the mastery. Okay. So it's exciting, but it's not a rosy, there's this graph that this meme people think a success is like from 1 point straight like that. No, right. There's going to be there's going to go ups and downs and things like that. So if you have a long term, for instance, if I told her that give me the money for 3 months, which is what she would have done, assuming she decided to go for treasury bills.
Okay.
For that 13% per annum, and you're even cool with it. But if I told you that you're going to make 80% in 3 months, obviously you should have brought her life savings. I'm like, of course, yeah. But just because you have access to it daily, you feel like, hey, it's dipping 10%. No, like, get me out.
Get me out.
So you need to have a strategy. You need to have patience. You need to understand what you're doing. and then with time you're gonna master it. Yes.
Thank you. You answered the question even before I asked it, so that's great.
Right.
The next thing you do, network marketing. I want us to talk about that a bit. So, what is that about, and what exactly do you do when it comes to network marketing?
So when it comes to network marketing, I'm a business builder. Okay. What are business builders? We partner with a company we feel has value in terms of the product it's offering, and then by so doing, we share the breakthrough news to friends, family, loved ones. These people buy into the product, the companies, and then we grow with them. So as the company is growing, making sales from the products, and we are sharing opportunity, we are earning commissions out of it. So it's very, very simple. The challenge with network marketing is that over the years, it had a bad name and bad reputation from scammers and many things that have happened to the industry.
I'm even going to come to that.
Yes, I know you come to that. Many things that have happened to the industry. So it's difficult for people to realign with it, because the experience we had, even in this country, was that it was associated with scam, it was associated with pyramids and stuff like that. So even when people see something genuine, they are thinking, and I don't blame them, of course, because they are thinking it is something bad. But the truth of the matter is that every super wealthy person in this world builds networks. Okay, there's one key thing that brings wealth. It's called leverage. Network marketing brings you leverage. Okay, for instance, I'm sitting here with you, but I'm making money. You just don't know. Every single minute I'm making money. Right? Why? Assuming I told you, come and invest in Nestle. Okay, Nestle is bringing a product called Milo in the 1980s. And everywhere that we'll find Milo, actually, we're going to give you 1 CD if someone buys Milo for 20 CDs. Okay, do you know how much money you make now? Imagine every corner there's Milo. Imagine you're giving just one pesewa from every sale. So leverage is everything in life. Okay, you go to Facebook and WhatsApp. Okay, you are leveraging. Okay, you're making Mark Zuckerberg rich and richer. Okay, you go to Amazon. Okay, he's leveraging all these stores, bringing them together, build a platform. So basically, the concept is leverage. If you understand leverage in life, trust me, you're going to make a lot of money without serious. I won't say without serious, but without hustle. Okay, because it pays you forever for the effort you put in at one time. Okay, at the initial stages. Okay, so that is the advantage. And once I understood the concept of leverage, I was like, okay, then I need to get a company that I know is here for the long term. And once you know the company is here for the long term, it's not trying to make money off Ghanaians and it's going to disappear in the next moment, then all right. And then number 2, they have to be offering a product that has value, okay, or that is impacting the lives of people. So once they check those boxes for you, then you know that all right, cool, if we help them build a system that will take this product or whatever products that they're offering to every corner, then you'll be making your residual income. The keyword is residual income, which comes from leverage, right? So that is the main thing. Building a business, okay, like I told you, I'm a business with a network marketing company. That's for you. It gives you leverage, and you cannot buy. No disrespect to you, if Ashley is feeling ill right now and she's not able to come to the office, are they going to pay you? Nope. No. If you are replaced with somebody, you have to be physically present to make your money. Yeah. Okay. Leveraging doesn't work like that. Okay. Would you rather have 100% of your efforts, Ashley's effort, or would you have 1% of the effort of 100 people? Think about it.
Think about that, guys. Deep. That's deep. Think about it.
Yeah.
Yes, please. You see my chairman, chairman. So, when it comes to network marketing, how is the difference from affiliate marketing?
All right. So affiliate marketing, basically there's no recruiting. Okay, you don't go telling people, oh, I've joined this company that is offering this product. No. You don't need to tell others to join. Okay, so you are promoting a service or a product. Okay, and based on the traffic you drive to that product or service, okay, the company will pay you directly in the commissions you make. That is affiliate marketing. So I sign up with a company and say, look, each time someone registers on Binance Exchange through me, Kofi, okay, they're going to give me 10% of the person's initial money. Okay, so I try as much as possible that, hey, if you want to join crypto trading, okay, you need to register for Binance. I give you my link. So I am affiliate marketing, okay, in that regard. So, okay, another company comes and look, we are offering a website, blah, blah, so I drive people to that website, or a website that provides a service. I drive people to that website, okay, because I registered an affiliate with them. And as many people as go there through my link, they pay me the commission for driving the traffic there. Okay. In network marketing, okay, you are not simply referring people to the you are also telling people that come and join and build your own network and also have your own leverage system. Okay. So in this case, you need to open your mouth and tell people about it, not just point them to the place. I hope you understand the distinction I'm making. Yes. So that in a nutshell, without trying to go into technicalities, is the difference between affiliate marketing and network marketing. It's a people business when it comes to network marketing. Okay, because you need to build relationships, you need to talk to people, you need to understand what you're trying to do. Okay, but affiliate marketing, no, I don't need to. If I am affiliate for Nestle, for instance, and then as many people as I drive to go and get whatever product that they are offering, straight they pay me directly, or they say, oh, you have Kofi's code, then they're going to give Kofi the money. Okay. So that won't necessarily give you leverage. You are still working for your money. You are trading time for money.
Yeah.
But when network marketing, there'll come a time that you're going to leverage on the efforts of people, even when you're not physically doing the right.
I think with affiliate marketing, that's what most YouTubers use. They just drive traffic from their platform to go here, use my code, this is this.
Right. Get 10% off, right.
Yeah, it's
right. Now let me address pyramid schemes. Okay. So
before you address it, I noticed this connection between pyramid schemes and network marketing is also known as multi-level marketing.
Right.
Yeah. So it looks like the same structure where it's someone at the top who starts the whole thing, and he has, let's say, his 5 executives, and the 5 executives are tasked to get 5 people maybe every month to come join the business. And so the 5 people who come, they purchase their products and they're asked to sell the so that is exactly the same as the pyramid scheme, even though with the pyramid scheme they're not selling any actual products, but it's still based on recruitment and how many people you bring on board, so you're spending other investors' money. That seems to be a very similar structure, which I think is problematic and which I think scares people away from network marketing.
True. So just like you rightfully pointed out, with pyramid schemes, the key thing you have to look out for is that, number one, is there an underlying product? Okay, if people are getting paid just solely because they are bringing people on board, run away from your life. Okay, and that every commission earned by any member of a network marketing company, okay, it should be tied to the sale of a product. Okay, so if Ashley, I invite you to join my company, okay, and then you come on board, you are giving products worth the initial amount, okay. But then if I just say, oh, come and join, we are doing something funny, like, I can't even explain it to you, but then it's like, okay, whatever. So what did I pay the money for? No, it was given to the person on top. No. That is scary. That is dangerous. You have to run. Okay. But okay, Ashley comes on board and is giving something tangible. She can see that, okay, this is what my money was used for. And then, sells a product outside. And out of that product sale, gets a commission for that product. Then you know that every commission paid you is tied to a tangible product or good. Okay. So that is usually a key distinguishing feature. Now, with pyramid schemes too, the person at the top is always going to be the richest. Okay. But if you look, and I'm not sure time will give us, permit us to go into network marketing. But if you're joining a network marketing commission, okay, a company, you have to look at something we call a compensation plan. So if the compensation plan is only going to reward the person at the top, then run away. Let me give you an example. People say, the people who come early always make the most money. That's not true. Okay, I know people who join my company that I work with, okay, and 4 or 5 years, they've probably made about 6,000, 7,000 Ghana cedis, okay, through the entire 4 or 5 years. But I know someone who joined 8 months ago is making 30,000 Ghana cedis monthly. Okay, so how did the person do that? Build your pyramid if you think that is what it is, okay? So it actually rewards, the compensation plan should be in such a way that it would reward work done and not position. Okay. Yes. If you want to know more, you can call me and then I'll go into details with that, because that's another 30 minutes. Yes. Yeah. So if you look at you can tell that, because I joined and Ashley came through me, then I'm always going to make more money than Ashley. Nope. But you, surprisingly or intuitively, could actually make way more money than me, even if you join my company today. It's purely efforts and how you balance your company or your business. Yeah.
Good point.
Right.
Good point.
Right.
I want to know your personal investment strategy and what are the things that you invest in.
Right. There's a saying that if you are that good at something, never offer it for free. Never do it for free. Anyway, so I'll try. I'll give you an idea, but I cannot. And again, another reason I can't tell you is that I remember when we did a session on investments, I told you that investments they are tailor made. Okay, so for instance, my risk appetite might be different from your risk appetite. I might be interested in buying, investing in alcoholic based product. You might be cref. So hey, you go near alcohol. Me, cigarette crime. I want my money. So basically, because they are tailor made, there's no one clear cut solution for everybody that fits everybody. Okay. So simple, we are trying to buy low and you're trying to sell high. Okay. So there's no right or wrong. Sometimes people say, oh, don't put all your eggs in one basket, which helps in investments. Okay. So you've invested a little bit in, okay, let me give you a broad overview. So a lot of my money, the bulk of it, is in secure investments. Stability and security is paramount. Don't look at the returns. Okay, if your money is going to be protected in 2, 3, 4, 5, 10 years, go for that one first. Okay, because the more you take on risk, the higher it is that you will lose your money.
Yeah.
Okay, so if you know that 40, 50, 60% of your money is in stable investments, which will give you a decent, there's not crazy returns, but it's decent over time, because at the end of the day, you're protecting your money. That is preferable. Okay, then you put the rest 20, 30% into medium risk. Okay, whether you're buying bonds or you're buying some shares or stuff like that, doing some, and then you can put the 10% into ridiculous risk. Okay, that includes crypto assets and stuff like that. Okay, even in crypto assets, my money that I allocate for crypto assets, okay, there is another portion of that money that is for absurdly ridiculous risk.
Right.
I'm talking risk that can make you, and I've seen this first, and I've seen 18,000% in 1 week.
Wow.
Yes. And that can also let you lose that
same
100% in 2 minutes. So you need to have a balance, because if I told you, I did this, and then you also brought your life savings and then it went south, you blame, So even in crypto, trust me, they are safe assets. The first 20 coins you look at on the market cap, you realize that by and large they're going to be here for the long term. Okay, Bitcoin isn't going anywhere, Ethereum isn't going anywhere, Cardano isn't going anywhere. But then if you look at others that are coming up and you're like, my goodness, this thing looks scary and fishy, and they will give you upside return. So even with crypto, you need to divide your money and say, look, for 10% of my money, I'm only going to take on crazy risk. So protect your money. Stability, security is paramount. Okay, buy some decent fixed deposits or money market instruments. Buy some bonds with medium risk, and then look for the ridiculous risk. Okay, you can classify network marketing and stuff like that as a medium risk as well, where you put a little bit. Okay, I'm going to build a business out of it. But by and large, that is not an investment per se, because you're actually building your business on the side. So once you have categorized it based on your risk levels, based on having at the background that protecting your money is better than the returns you're going to make and all of that, based on what you're going to use the money for and all of that, you can decide your allocations. And then you need a mentor to tell you, okay, which ones can you now put your money into? For instance, you've decided I'm going to put 10-15% into cryptos or digital assets. Okay, then I come to you and say, okay, there's something called NFTs. Okay, I didn't even go into the different types. So I say, okay, there's something called NFTs, and I think this NFT is going to do great. Okay, it is risky, but if I'm right and it goes great, this is the potential. Okay, it doesn't mean you're going to bring all your savings and come. No, you're only going to put a certain risky portion out of even your crypto bag into that. So once you have these categorizations in mind, and then you can space them out, and incredible things will happen to you.
Awesome. I love that. Thank you. To end our session, I'm just going to ask you 3 questions. You can answer with a word or one sentence. Ooh. Whichever whichever one. First question: when did you make your first $1,000, and what did you do with it?
My first $1,000, I was in medical school. I started making money by starting a business in medical school. Before that,
the medicine, you've dropped it.
No. I practice it. The long-term goal will be to do something very, very impressive. So watch out for it.
Business side.
Yeah, so on the business side. So watch out for it. So yeah, that is there. So $1,000. I think I made it in my 6th year of doing medicine. on medical school. That's level 600. Yes, I was fixing computers in school. I was, doing some things. So, I go to IT guy even in medical school. So I was giving them antivirus. I was fixing, problem hardware and all of that. And I think I blew the money. Okay. You blew it. Trust me.
Sure.
I don't remember what I did with it. Probably,
Yeah,
I didn't even travel. Maybe bought a PlayStation or something. And that was it.
That kind of okay, sure. I mean, you were young, so I mean.
Of course, yeah.
Second question: have you ever been in an awkward money situation before?
What do you mean awkward?
Maybe quite an uncomfortable, something that you didn't see happening and just affected you financially.
Right. So, like, I've lost $5,000 in 3 minutes trying to make money, and that was very uncomfortable because I was in traffic. I remember very well. Yeah. So when all these things have shaped me, because now I'm not scared of losing money. Okay, if you're afraid to make money, you're never going to make money. Okay, because I remember being in traffic and I was trading binary options then. Okay, so binary options also classify under the high risk things that you might want to do together with digital assets. It's a form of forex trading, but you're timing the market. So binary options is very risky. In as much as you can make quick gains in minutes, literally between 1 to 5 minutes. Okay, so I thought I saw an opportunity that was going to make my 5,000 go to 10,000. And boom, it went south in the final seconds. And I remember parking my car and thinking to myself, what an idiot. Like, why? Because, I wasn't following any good money management practices then. I'm like, why did I risk all of that? Okay, because that's the thing with human beings. Okay, you see something going well and you think, why don't I just drop everything in it? Yes, but you mess up. But I always tell people, you need to go through all these things to shape you and make you become who you really are. Because scared money, no one don't make no money. And number two, if you've not lost money, you can't tell people about money.
Yeah.
Right. So I feel like, okay, it all helped. It all shaped me. And now this is who I am.
I'm actually glad nothing bad happened, because, you weren't involved in an accident or anything.
I parked and I saw the tears coming.
Oh.
That means, that thing about because I remember at the time it was like over 20,000 Ghana cedis. I'm like, let's just throw that away. But yeah, it happens. You make it back. We move.
That question: what is your wildest dream?
My wildest dream is to be a dollar billionaire. Yeah. So anything is possible if things go well with you and God is on your side. So I feel like that is within reach. How it's gonna happen, we never know. Look at this guy from TikTok who, a year and a half ago was just fired from his job, and then all of a sudden downloads an app, tries to make sarcasm and then jokes, and all of a sudden it's worth $2 million in a year. So things can happen very fast in this world. Okay, so I believe once a system an opportunity opens up where you can leverage and then take it to the world, you never know how your $1 billion is gonna come. Yeah, so it will be very nice to make more than even $1 billion, and then give back to society.
Yes.
Money is good, man. Let nobody tell you otherwise. It's a great thing. Yeah. So that's my wildest dream. I know it's gonna happen. So let's see.
That's great.
Yeah.
Thank you so much, Kofi, for coming today, for blessing us with this
welcome.
information. My boss, we'll talk after the show, so I'm gonna hit you up. Yeah, thank you to our listeners too for listening. Right, you need to listen to this probably again and again and put this into practice, because this is free information and you should make sure that you make use of it. Right, don't forget to subscribe wherever you're listening to: Apple, Google, Spotify. If you're watching us live on YouTube, click the bell, subscribe, turn on your notifications, and until next week, guys, be BezoSmart. Bye.
Bye, guys. See you. Thanks for listening. Cheers.
All right.